Hello and welcome to another update video about Bitcoin. It continues to just grind sideways basically. Therefore, we are currently looking only really at the shorter time frame here on the weekend. We can only see here that it's following the triangle forecast. I think in my last video yesterday we were down here, highlighted to you that it would be an ideal time to turn around for putting that E wave in. And it's done that, right? It put a nice E wave in, it adhered to the trend line and might have broken actually the triangle now to the downside. So ultimately with that, it's currently following the triangle forecast. The idea has been and still is that we're putting here a possible WXY correction in, with the X wave being the triangle consisting of A, B, C, D, E. That's based on the Elliott Wave rules. Then each of the waves in a triangle is a corrective wave. So you've got 5 waves in the triangle, each being corrective, and a breakout to the opposite side of the E wave is preferred. It already broke out of the trend line. That's not enough to confirm a triangle breakout as per Elliott Wave, but it broke below the D wave low. That's a good indication. Now you really only have a confirmation when it breaks below the B wave low. The reason for that is that triangles can always extend out, but really only below the B wave, it's confirmed. Now, waiting for a trade until its confirmation is there, now that's a different story, but I can only tell you from an analysis point of view that you still need to be on the lookout for an extension of the triangle. But for now, I would assume it's actually broken because we broke the trend line. The move down was quite sharp. That's typically what you see after a triangle broke. Now, it would be ideal now to reach sort of the 27.5K area, the 78.6 fib level. That would be quite short for a Y wave, unfortunately, but hopefully okay, because a drop much lower would basically make this 1-2 setup, which is ultimately a bullish setup, fairly unlikely. So we need to be on the lookout here. If we look at, ideal target, I mean, to be honest, again, the Y wave is very short, as you can see. So the very first common target that you would consider for a Y wave is actually the 61.8 extension. And that's at 27.5K. Now it goes slowly or slightly below our support range. Not a problem, because these support ranges are there for, if they hold, it's great. And the current pattern is still very likely, which means it could result in a third wave to the upside. However, if these are broken, it's also not a problem as long as it's not a sustained break. So what can always happen is, it breaks and it comes back immediately. Okay, not a problem at all. So I would be watching the 27,560 level and 27,500, which is the 61.8 extension, quite a common target for such a Y wave. Even though still compared to the other targets that are common for a Y wave, rare. But the other ones are too far down, so it would invalidate the pattern. One more option here is that we say, okay, is there another way to calculate the target? And yes, we can go to the beginning of the triangle. We take a vertical line, we add it to the high of the E wave, and then we get to around also 27.5K. So I'd be looking, in that region down here. If we really come down lower, and current support is the golden ratio at 27,828. If we come down lower, and it currently looks like it, in my opinion, looks a bit like a bear flag, this small one, then 27,500 would be ideal. A break below that would though take us down probably to 27K. It would invalidate the yellow 1-2 setup, but would then just reset blue wave 2. So as long as we're holding 27,060, I can rely on blue wave 2. So we basically would just would just lose a wave degree, but ultimately could continue to rally higher in a third wave. And that's basically the situation at the moment we're in. Let me just see that. There was a comment I read today that obviously the situation reminded, sorry, it just comes into my mind. I can't remember your name. I would need to look it up now. But you commented, and you'll know if it's you if you watch the video. You commented about the current range is very similar to what we did back in December, and if I was thinking that we're in a very similar situation. I can't really understand the similarities. I mean, yeah, it's a consolidation, it's sideways. You did say we expect a pullback, and if we're in a similar situation now, it's the other way around, isn't it? So at the time we expected a pullback to the upside, yeah. Didn't obviously expect at the time primarily that it would develop into a major trend, but it's fine. You know, the expectation was for a pullback to the upside because it just looked much better. I think at the time we looked at here wave A, wave B, and we expected a C wave to the upside. Now that became something much more bullish. It just needed the right look. The idea was that we could easily come down further here, but after another high. Okay, so I think the overall perspective to get back into an uptrend was correct, just not that it evolved into, you know, let's say a major trend to the upside, because price is doubled, to be fair. Now I don't really see where we are, why this is similar. It doesn't need here this strong pullback. It can get one. It's absolutely reasonable to expect a deeper pullback, and that's why I've got these different support areas on the chart. You know, they're all likely options. We can get a shallow pullback as long as the support area holds. You know, this is what the market needs. If we get a deeper pullback, it's fine as well. It would, however, not invalidate the higher degree bullish assumption here. But yeah, let me know if you need that more specified. But ultimately, it's just consolidation, boring sideways range consolidation. Just the situation was a little bit different here then. Yeah. Here it's all about, yeah, you know, we can get a deeper pullback. To be honest, it is quite rare to get a very shallow pullback in a wave 2. But I've seen it often enough in crypto that if really a strong uptrend starts, pullbacks are very shallow. Did post that on Twitter a few days ago that the strength of a pullback in a market, in a trend, yeah, if you get a pullback, the strength of that pullback tells you a lot about the quality of the market. So if it's very bearish still, you get very deep pullbacks. If it is not bearish and actually quite bullish, for example, in an uptrend then, and we're actually at the beginning of maybe a third wave, pullbacks might not necessarily be very deep. So again, those, if we really only get shallow pullbacks here, it's not anything that would be, you know, invalidating Elliott Wave analysis or anything, because there is no rule about how deep a wave 2 needs to be. There are guidelines, but the market sometimes doesn't need it, especially crypto. If the trend is very strong, it might not need that deep pullback. And therefore, I think it's just worth knowing about the potential of a deeper pullback. And actually, that is quite reasonable to expect one. Actually, we have to consider and, well, expect it for risk management reasons. But it's also knowing that the market doesn't need to come down that low, and that everybody at the moment, and I did say that already, I think last week, needs to make that consideration for themselves if they want to be part of the third wave rally if it starts. I think it's just a tactical and strategic thinking, because if somebody has no exposure here and the third wave starts, I can guarantee you there will be a lot of FOMO. And the third wave can take us to 40, 45K, right? Absolutely, right? So that's still the possibility, but everybody needs to decide for themselves if they haven't got any exposure, you know, do you want to get some? Yeah, I can't answer that for you, but I can only tell you there's a reasonable chance we get a third wave rally from here, especially as long as support is holding. That's the expectation. Now, support can easily break, absolutely. So that's the part where, you know, risk management comes into play, position sizing, and everybody just needs to understand how far can Bitcoin actually drop here. And it can actually drop in a bullish scenario all the way down to 17.5K. Yeah, it's quite a bit, right? That's why I always emphasize this green area as a possible entry point, which I used, because if you enter up here, you know, price can fall around about 36% before we get bearish again. So it's quite a distance. Means that if anybody leveraged up here, it might be worth taking some risk off, you know. But these are all assumptions or thoughts that everybody has to make for themselves, depending on their portfolio risk and everything, right? But yeah, I can only say there's a reasonable chance, and actually a high chance, we break out directly from here to the upside, and anybody who doesn't have a position will be left out. Now, can I guarantee to you that it's going to happen? Of course not. That's why we risk manage, right? That's why risk management is so important in trading. So yeah, that's sort of the mindset I think that's needed. Again, nothing really happened so far. So hopefully we'll see. I mean, today is weekly candle close. Tomorrow stock market is open again. So maybe we start to see finally a bit of a breakout of this range at some point. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.